Hello, this is Martin here from seekedge, the channel for learning about trading and investing. Welcome to the weekly market analysis show. We'll look at the markets for next week, starting from August 9th, Monday 2021. Right. So here we look at the different parameters and then try to analyze what happened last week and how we can make a plan for the next week's trading. Okay. So before getting into that, in case you have not subscribed, just please go in and subscribe and also share this link to maximum. We have the only motivation that we have is more subscriptions, and kindly share it to all your friends and relatives and whoever you think may find this useful. Please do that. Okay, so as usual we will begin with what is the price action and what candlestick patterns we'll see. So the weekly, you can see it's a bullish green candle. It's a breakout candle, right, on the Nifty, and it was nearly a 5% kind of move, a wide range green candle on the Bank Nifty also. So both has wide range green candles, bullish candles, right? And what happened last week is Nifty broke out from a 7 to 8 week of long consolidation that was happening, right? The zigzag movement that was happening, and Nifty made 3% up move, right? And then retraced and gave up a little bit of 0.8% of that, and later so Bank Nifty also made big moves, right? And retraced and gave up around 1.5% of that later. Initially 5% more was what happened in Bank Nifty. So that was the breakout week that was there. Nifty hit all-time high, new all-time high, so that Bank Nifty has not broken out, right? So the latest Nifty candle is showing that there are three inside bars. We'll see that in the charts in the next slide. Inside bar is where the next candle appears inside the high and the low of the previous candle. So that happened three times. Three bars were inside there, forming a triangular formation, and it may be breaking upside. So it can also be looked up as flag and power breakout. That's on the Nifty. The Bank Nifty, the daily latest candle is also an inside candle. A doji game 2 days back, and then yesterday, the previous day, another bearish candle came inside the doji, right? So that's also an inside candle. So it is the latest candle is kind of a small body candle, right? It's kind of a spinning top, but it's not in the top, so it's in the not exactly the top during the retracement that happened. So there's nothing bearish about that, right? Most likely. So that's about the candlestick patterns and the price action that happened last week, the Nifty and the Bank Nifty. So if you look at the Bollinger Bands, what you can see that the volatility expansion, the walking on the bands of the of the Bollinger Bands has started in Nifty. But the thing is, the Bank Nifty is yet to climb the Bollinger Bands. It's still in the consolidation mode. If you see, even though it has made big moves, it is yet to break out from the volatility expansion point of view. So this is what we see, whatever we explain. So this is a daily lift Nifty and the daily Bank Nifty, right? So you can see that inside, three inside bars coming in the Bank Nifty. Here, two inside bars one inside bar inside the doji can be seen on the left side on Nifty. Weekly candle is a breakout clearly after consolidation of 6 to 7 weeks, and here also you can see a weekly wide range bullish breakout, and Bollinger Bands. You can see that Nifty, it has expanded and started working on the Bollinger Bands. So clear consolidation, expansion. Here consolidation, but expansion is not fully broken out, spilled out like this. It is yet to happen, but it was big moves that happened last week. Now if you look at the support resistances, you can see that the Nifty broke out 850 to 950, that resistance zone, and then 16,000 also was taken away. The new all-time high is 16,350 levels, right? So the previous resistances now will act as support areas, like 15,850, 950 range band will be the first support, then you have 15,500 to 650, then you have 15,250 to 400. So the support levels and supports, and below that you have 50,000 levels, right? Upwards it's uncharted territory, but still you can look at 16,350 where the market got a slight correction that happened. That's the first resistance, and above that you can have 16,500 as a trend projections. Based 16,500 is also a rounding number, so you can see the resistance on Nifty in that side. And Bank Nifty, you can see that the support zone is 35,650 and 35,850. That is where it is currently residing. And then upwards you have to break the 34,400 and the upwards you have to break the 36,000 and 36,500. After that you have the all-time 36,700 levels that has to be broken, right? And the support zone after the 35,650 to 850 zone is broken, you have 34,400 to 34,700, which is the support area for the Bank Nifty. So I hope that helps for planning your trades for the next week. Taking positions on options definitely is based on the support and the resistance levels. So whatever we just explained, we can see that there is a channel support. It does not slip from the channel that has started long back in the before the May month itself of 2021. And it is in the median and got some resistance upwards. You can see that the fib 38% is what got stuck, and further it's uncharted territory for Nifty. Here also you have a channel. Now it bounced from the channel upwards. You can see the inside bars, the triangle. Let us hit the resistance zone, and this has to be covered before it can say you have the all-time highs up there, right? So that's about Bank Nifty. And the momentum, if you see that the RSI momentum has shifted to the bullish zones now. It was felt for a long time, right? The median of there's a medium and long term momentum that is already intact bullish in the Nifty. And we observed last week there is a bullish momentum, positive reverse divergence was there, right? That exactly worked and moved the market technically, right? Bank Nifty momentum, it also has entered the bullish zones from the sideways, but it slips slightly 59 slightly into the bearish zones. It happened, but I don't think it's too much. It can still be considered bull zone, right? Monthly and weekly also buried the bull zones. It was not that earlier. It had slipped. So weekly, monthly, and daily all are in bullish zones now. And if from the momentum point of view, the ADX trend indicator point of view, it is also bullish in all time frames, rising and gaining strength upwards. So that's about momentum and trend, and you can see that this is the momentum. You can see it's above and taking a small dip in the Bank Nifty case on the right side. And divergence, this is the divergence that we spoke about last week. We said the bullish divergence, the bearish one is over, and now the bullish one could take the market up, and that's exactly what happened, right? And continues to be in play right now. As long as the market moves up, it could be part of this. So yeah, that trend indicators are all bullish, both on Nifty on the left side and Bank Nifty on the right side. And now if you move on to the open interest analysis, right, and the volatility is open interest, you can see that it did a short build up on the futures, and the option trade is the highest for the 12th August expiries. So the highest call rating is seen as 16,300, and then 16,400 is also a good rating. And the put rating can be seen as 15,500 highest, and then 16,000. Suppose so 16,000 and 16,500 maybe the range where the expiry play will be happening. So Bank Nifty, you can see that the open interest highest call rating is 36,000, and then we have 35,000 also the highest put rating is seen there, right? So the put call ratio is bullish on 1.1 at Nifty and 0.83 on the Bank Nifty. That's not that bullish, but okay. VIX slipped 7%, right? It moved up and then slipped, and finally settled at 12.6. Right, it's again the low volatility. So IVs for the Nifty is 11.7. It's higher than the historic IV of 9.3, but the IVP still continue to be at the 3 level, which is not much use for the VIX. The VIX chart can be seen there on the right side, and the open interest support and resistance levels can be seen there bottom side. So that's the open interest and the volatility details. Let's move ahead and so this is the open interest chart details that you can see. 16,300 highest call rating and 36,000 right on the Bank Nifty. Now sectorial watch. How did this different sectors work? So the IT sector index moved nearly 4% last week, right? But the bearish divergence still is a threat, and you have to be cautiously bullish, right? So as long as the dollar is gaining strength, bullishness will continue, right? The dollar slightly dipped last week, so divergence is still in play. But it is in the bull zones definitely. So FMCG moved up nearly 2.5% last week, and then gave up a little of that. right? There is a bearish momentum that is there on the weekly of the FMCG, so I have to be a little cautious when you are taking the trades on FMCG stocks until that is negated, right? And the metal index has moved further 2% more, right? And now, but what do you see? There is a logic candle that you can see. So it's indecisiveness, right? So we had anticipated last week that there is a positive reverse divergence which is bullish, and that worked well, and that's 10% move also happened. Now this 2% is additional to that, right? Now we can see that there is a bearish momentum, so we have to be again cautiously bullish only on NIFTY in metal. So so metal FMCG IT or has got bearish divergence. You have to be a little cautious, but they all have moved in the bullish zones. Auto sector is still in the sideways, was bearish, it has moved back, and then last week it moved 3.5%, right? And gave up 1% of that after that, right? So it's like kind of consolidating and then waiting for a breakout to happen later, right? So we have to wait for the momentum to pick up, right? And the farmer, previous week we had anticipated a bearish divergence, and then it worked and it brought the market down 6%. And but last week what happened is weekly bullish momentum reverse divergence was identified, and it is working, right? But there is an industry doji, so we should wait for that bullish momentum divergence to work up. So pharma is also bullish. Potentially there is a bullish divergence, so it can move up. IT FMCG metal bullish, but cautiously bullish because there is bearish divergence, and auto sector is sideways and had to catch up on the momentum. So that's the sector we watch. Two stock picks that is put in here. One is Siemens, another one is Kodak Mahindra Bank. Siemens, you can see that there is a bullish divergence, reverse divergence actually, and you can see that it is already in play. It has not met the target, so that wide range the weekly candle that you see is clear working of the divergence that is there, right? So it is clearly bullish and it could go further up for sure. Yeah, again, this is not a recommendation. You have to trade at your own risk and your own financial advisors advice, and then your own risk, right? This is just for educational purpose I'm saying. And Kodak Mahindra Bank, you can see that there is a channel formation that's happening, and there is a good support area which is a previous support zone also, and it is broken out, and most likely it will break out of the channel, and then the momentum, you can see that it has taken a support on the 40, which is very bullish, and it has bounced from there, right? So which is so there is further up move can be expected on the Kodak Mahindra Bank, right? These are all the picks. And institutional participation, if you see last week, for institutions all bought actually 2,600 crores, and DA also bought around 900 crores. So that was what moved the market, combined buying, right? So net longs of derivatives have also moved last week, right? So that derivative participation has turned good last week, and the market has moved up. Now look at the global markets and the global commodities. We see US market is all of them there. Nasdaq, S&P 500, and Dow Jones, all of them, all green candles, and actually there is some correction here. Small body red bullish, small body red has to be ignored, and it is actually bullish green candles, right? So they are green, basically US markets are green, and the dollar index has strengthened 1% nearly. It's at a neckline W pattern breakout zone. It was consolidating, dipped, and then again got back there, right? So dollar is strengthening. Crude oil has dipped, which is good for the economy. 6.5% of dip has happened, right? And USD INR currency pair is is a red candle, and the spinning top kind of thing. And second time it just slipped out of the previous support zone, and it could be dipping further in the channel, as you see on the right side top. And bottom you have the gold, which has corrected 4%. The wide range bearish candle, 4% correction. It has taken a support at the support zone band. It may be bouncing up further to the channel top after that, most likely, right? Now India VIX again, as we seen earlier, it has dropped less slightly, and it is still in the low volatility zones of 12.6, and so Vega positive strategies may work, as there may be spike that can be accepted, and that's why we have a nifty calendar spread positions that is Vega positive as suggested here. As you see, this is the bank nifty strategy or calendar spread, where we are selling 36,600 at higher strike, and then as a lower strike, and 37 100 call is bought for the next week, not this week. So that forms a calendar spread, and it's got good PRP. 90.5% is very good, and look at the margin, very low margin, and so low risk, high probability, and reasonable risk reward, right? So that is actionable. And just to wrap up, markets fall. Again, you have to correct. Market had fallen and it broke out from the consolidation and made big moves last week, right? And all-time highs were registered. Bank Nifty continued, Bank Nifty, also made big moves, but it continued to be the volatility expansion. It is waiting for that to happen, right? So overall, the bias is bullish clearly on the momentum and the trend perspective. With possible consolidation can happen next week because it had moved up a lot in a short span of time. So there will be some consolidation, for some more days, and then it will further take the energy to move further up, right? So India week still continue to be low volatility, which is there in every week. It continues to be difficult for the buyers and the sellers because of the sudden spikes and then dips. So there's no hardly any move. It continues to be the same low volatility regime, right? So positional traders should trade the stop loss now that it has moved up, and they can put the stop loss at the new supports levels, the previous resistances. That's where the stop loss has to be placed, and until a clear next signal breaking of the new support zones are there, there's no way to be further, right? So that's a wrap up. Once again, thanks for watching this first of all. If you're not subscribed, please click the subscribe button and share it to maximum, as I said at the beginning of the video, and share it to maximum people. We have very low subscriptions, and the only way to keep motivating us to keep making videos like this is to share it to maximum number of people and subscribing. Thank you so much for watching, and happy trading and happy investing. Bye.